What's up, guys? Welcome back to another episode of Raw Stocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're entering into a new month, so we're going to do something a little bit different than our normal daily analysis. We're going to start with the top-down monthly chart, and we're going to start to build this together so you guys can see exactly what I see as we move all the way down into some of the lower time frame charts. But because we're in a new month, I want to go ahead and start off with a monthly chart and just take a look at some different things. Before we get started, don't forget to check out the links in the description below. Got a link to the Raw Stocks website. Currently running a special on the premium Discord upgrade. We're going to be doing 50% off. We just recently increased the prices, which is a great thing. We're getting a lot of support, but we're going to run a special right now, 50% off the first month, just for the next week or two. So if you had missed out on the opportunity to get the $25 membership, you'll have a week to secure that for the first month, just to check us out and see how things are. So let's go ahead and jump into the charts here. Like I said, we get the monthly chart of Tesla pulled up. And the first things I want to mark off on my chart, which I already marked a couple things off just for you guys to see, I want to mark out the previous month high and low. All right, those are going to be our nearest high time frame liquidity draws. And we got that coming in around 231.95 and 182.19. So that's previous month high and low. That's the wicks. That's not including the candle bodies where we opened and closed. But that's the wicks high and low. So that's going to be our nearest internal liquidity draw. Okay. I also drew the, triangle or the wedge kind of that we're in right now on the monthly chart. And that's from the low of January 2023 to the high of July 2023. Right. And then that captures July 2024's high and then the low of April 2024. So currently inside this, this wedge, or this triangle pattern that's eventually going to break up or break down, right? But we can stay consolidating in this. I mean, if we went all the way close to the apex, probably going to be somewhere like February or March 2026 is what that looks like if we were to extend these resistance and support lines all the way till they intersect. It could be a long time. Now, are we going to wait all the way till then to break up or break down? Not likely. But, it's a possibility that we could continue to consolidate in this 180, 170, 230, 240 range, as this gets tighter and tighter, eventually going to cause, like I said, a breakup or breakdown. So we got our internal liquidity levels. Now on a monthly chart, we have a fair value gap, and that fair value gap came from May high to July low of this year. And inside those wicks did not overlap. You can see last month we drew down into that fair value gap, right? So we already drew on the liquidity down here. We ran a test. We didn't quite get down to our consolidated lows here, right? But we ran a test through that fair value gap. That's a pretty good sign that we could potentially see price head higher sometime this month. It doesn't mean that we're going to go ripping. But I also don't think that, we're going to completely close this fair value gap out. We might trade down into it, right? Down, test that 200 level, could even see as low as 193, right? It might come down, trade down in the 188 to close the month. Who knows? We could draw it back down. We already drew down once and saw a pretty strong reaction to that. But we could draw down again into it, but we know liquidity is going to sit here. It's going to sit at this wick low as well. So it wouldn't be unlikely to see us draw here. 200 seems like a pretty good level to be buying at, especially for long term. But again, also all the way down to 180. And then we have our support line. If we were to just completely fall out below all these wicks, below all this liquidity down here, right, we could see, 150 if it was next month. Right, we could see 154 next month after that, right? November 156. We could see lows if we were to test that support line. But I think with this fair value gap, that gives us a pretty good indication that we're likely to, if we draw down into it, see a reaction back to the upside. Now you can see if we look at other, high time frame fair value gaps, if you were to say, look at this one, you can see we drew into it multiple months, right? And then saw reactions, right? We came down to it, right? We popped up. We draw down into it, we popped up. We drew back down into it, we popped back up, ultimately closing down, right? It's hard to tell if this one popped up first or down first, but either way, you can see there's a lot of reactions inside of these, right? And that's higher up in the move. This is lower in the move. So if we draw down, we're likely to pop back up, see where it goes, right? Same thing if you look at the bearish fair value gap right here. You can see we didn't draw back down into or draw up into it, but we did draw back up and test it, right? After it was the month after it was placed. Ultimately, we ended up closing that and inverting that. So that's also a strong sign. If we were to look at that, I'm not going to leave it on the chart, but if we were to look at that as an inverted fair value gap on a high time frame, right? If we leave this open around this 207, 206, 207 mark for the month, right? That could hold us as support too and push us up without having to drop back down into this fair value gap. Now, once this reinverts, then we'd be looking at this fair value gap. And again, these are monthly candle closes. We jump to the weekly chart. You can see the current week we're in. So we have, you know, the monthly high. So that moves over to a new month. Which is why this is lower than this high, because this high started in at the end of July. So this is the monthly high. This is a previous weekly high. But what we want to do here is also mark off the previous week high and low. Okay, you can see we already ran a test of the previous week high in today's wick. Right now we're testing low, so we could see a drop down to 202.75, right? And then we have that monthly fair value gap right there. But we can also see that there's a weekly fair value gap right here. And we want to really see that hold, right? We pushed up, right? We closed this, inverted this fair value gap from these previous weeks, right? Now we're drawing back down into this one, this weekly fair value gap. What we want to see, and you can see we have a neutralized RSI, what we want to see is price push off of that, right? So typically what we see on fair value gaps is price draw into it and then price push up on it, right? And it likely push up to, you know, potentially test one of these levels, maybe this previous high up here in the 220s, maybe this wick high up here in the 234s, but we do want to see this push up. But again, these are weekly candles, right? So it may happen over multiple weeks, could even push us out into October before we see that nice push up. And we can continue to kind of consolidate in this range. We know that September is not a strong month for stocks seasonality wise. So not necessarily looking for that big move, but we do have September OPEX, which has some pretty favorable numbers for many stocks, even though we're trading down right now. So take a look at that. We have the options data on our Discord server for premium members. You can see all the gamma and delta levels for different strike prices, typically posting the weeklies, updating daily, and then often posting the OPEX or even the entire months, depending on the ticker. So weekly fair value gap, what I'm going to do is instead of having all these boxes, I'm going to go ahead and just put a line here. We'll make it green, right? And I'll put one here, and that's going to be our weekly bullish fair value gap. Okay, now I don't want to see this close, but we do have a monthly fair value gap, right? And we will label that as well. So that monthly fair value gap can potentially offer support if that weekly one closes. But I really don't want to see that weekly one close, because if that weekly one closes, right, around that 203.90, closing the week below that, likely to push down, you know, probably to 193 and then even potentially to 188. Now, if we go to the daily chart, right, we have our different levels marked off here. I did forget to mark off the previous week high, which again, we already tested that. And you can label these if you'd like. So I'm going to say previous week high. And here we're going to go previous week low. So then we have those marked on our charts when we start dropping down into other time frames. So now we got the daily. The daily, you can see there's an order block sitting up here, 250s, 260s, right? If we get pushing up, even though we got a down close day today, right? This looks promising. Now we did get rejected here in this daily fair value gap, and we have had 1, 2 breaks of structure, right? We had the original change of character, which then drew back up to this breaker block, right? We had the second break of structure here, which we drew back up also to the breaker block, right? And if you were to map out those breaker blocks, we're looking at this, and we found rejection, right, in that. But now we've come down and we set a higher low, right? And so we'll be seeing, do we run this low from the previous week low, right? And at that point in time, we could be looking to run at this low here, the 182, right? And then see about even dropping lower and testing that support level on the high time frame, right? We also have liquidity down here at 167. So if we start aggressively dropping and we take this previous week low, we'd be targeting this fair value gap. Then we'd be targeting sell side liquidity down here. Then the next level is sell side liquidity down here. But this is the daily chart, so we'll see what we get tomorrow. If we start to make that push up and we can get through this breaker block, that breaker block becomes support instead of resistance. So I'll show you what that would look like. If we got to move something like this, right, and we could break out above the previous highs here. We got this gap fill, right? If we could get above that, we come back down. That breaker block can mitigate price and then send us higher up into that order block, right, to test that. So that'd be what I'd be looking for a little bit longer term if we start rallying higher, right? And if we can't get that rally because this breaker block offered resistance, right? Now we've come back to test that consequent encroachment. If we start dropping down, we'll take that liquidity, right? See if that monthly fair value gap can offer support. If it does, it could send us back above, right, into the 220s. If not, going to drop down below liquidity, right? And then potentially below the next level of liquidity and testing that support level, right? Don't want to see that. That'd be pretty nasty for Tesla, but we'll just have to wait and see if we make a run at some of the sell side liquidity. We'll zoom in the chart a little bit and we'll mark off today's highs and lows as well. So going into tomorrow, we got previous day high and we got previous day low. So if we break down below a previous day low, we could be looking for the next day before that's low, right? Which is coming in at 206.93. We'll have to see. Some people don't count after hours trading or 24 hours trading. Let's see where we got, at least today on Robinhood, as far as a low goes. Currently sitting at 208. Low came in at 207.42. And so we didn't get below that 206.93, which was the previous day low for previous to today. So again, if we drop this previous low, like in tomorrow's session, we drop below today's low, right, 9.3, we'd be looking for 206.93. We drop below that, we're looking for 202.58. Okay, if we get moving up, we're looking for that push back up above today's high, 220, right? We'll just call it 220. If we push above even higher, right, we're looking for a move up into the 220 or 225, 230 area, back at these previous highs. I'm going to take that breaker block off just so we get a better look. We'll drop into the 1 hour chart. Zoom in a little bit more. Okay, the 1 hour chart again. And after hours trading, we're right down here around 208. We've already filled this gap with a wick. So I'm not too worried about that, but if we do start dropping, right, we're gonna be looking for that 207. There's some minor sell side liquidity down here at 206, right? And then we have our levels that we drew out previous week and our fair value gap closing down here. We also have another gap that hasn't been filled, so definitely a chance that we could target that gap. Let's go ahead and mark that off. Yeah, that's between a after hours close and a pre-market open. So we'll mark that. Mark it off as gap high. And then right around our previous week low. Oops. We got our gap low. So a couple different things right down there at that 206 and a half, 206 and 3/4 if we were to start targeting that. Right now I see this big fair value gap, right? And I see kind of this consolidation range. Wouldn't be abnormal to see us pop back up to this like 212 area where this fair value gap is. And then if price wants to go lower, delivering below the liquidity, right? Which then could potentially bring us down to some of those below targets. Now we could just drop, kind of straight down and then see it pop up after we maybe deliver below the liquidity, right? But I'm still looking at that 212 area as a potential target because there's a nice big 1 hour fair value gap there. So just be mindful that that's there. If we start moving up, we could get hung up in that, and that could prevent us from going higher at this point, right? And we do have our highs kind of set in here. Right, you can see our buy side to sell side to buy side of the curve failed to set a new high, right? So now we're going buy side to sell side, right? And then back to buy side of the curve. So we'll see where that drop lands us, and then we can know what to target as far as upside goes. We'll drop into the 15-minute chart. 15-minute chart, RSI, looks like there's a little bit more room to go. You can see there's a 207 and a half down to 206 order block here. That'd be a likely support area. You can see we popped down, tested it once, right? Buy side to sell side. We could find support in that, right? And then that could push us back up to that 212 that we were talking about. We also have an order block here that we just came up to, right? Hit it and rejected. So if we were to find support in this 15-minute order block, we then could target again back up at that 220. We also have another minor order block down here where some of our other targets are. So we'll just be taking a look at that again. You can see the curves here. We got buy side to sell side, back to buy side, right? We get our fair value gap there. We get our test, market maker buy model. As you see that break of structure occur here, drop down back to the breaker block right here, right? And then we saw that push up, right? Same thing. We get another, buy side to sell side to buy side, right? We see another gap there as we drop down, hit the gap, right? And then we see that move up. Ultimately, we reject that order block. Now we're going to come back down. We're going to test our support levels. So again, likely to find the support in this order block. If we give that up, we'll be dropping to the fair value gap. We'll be dropping to some of our high time frame targets like our monthly fair value gap down here if we don't find that support also at that 200 psychological level. So I'm not going to drop into any much lower time frames. I will pop onto the 1 minute just so we can see a look at what happened today. We take a look at what happened today. I'm going to pop up our silver bullet time macro as well. So here we see the market opens up, right? We went for that ride right out of the gate. You can see on the 1 minute time frame before market opens, we get a fair value gap right there. When market opens, we immediately invert that fair value gap, right? We draw back down into that inverted fair value gap. We go for a ride. There was your earliest entry in that inverted fair value gap on the 1 minute time frame. If you caught it, great. Nice sniper move there, right? You get this nice rip up. We were in some swings from the weekend that we closed out for a nice profit, right? And then you get this massive sell-off right out of the gate, right? And this is all in the first, 30 minutes of trading. And then you get this move up. And you can see same thing. You get this fair value gap. And this is leading into the silver bullet. And we took 2 trades in the silver bullet. We took the long and then we took the short. But you get this fair value gap right after liquidity's been delivered on, right before the silver bullet. Right? You get the fair value gap. You buy as we dip back into the fair value gap, right? You make a run. There's all kinds of fair value gaps here that you could have targeted. Ultimately, we touch the very top one. Right? That's a bearish one. But there was also another fair value gap you could have targeted right here. Right? Any of those would have been good exits if you took that long. Ultimately, we hit that. Right? Closed out our long trade here because we were long. Took a short trade and wrote it back down. Right? Get another fair value gap target right there. We drop back down to it. So 2 nice trades in the silver bullet time macro. And then you can see we just kind of dinked around a little bit, right? We entered some longs as we came back to approach 215. 215 had a good gamma level. Looked like potentially that could have been support to push us higher. But ultimately we rejected it. You can see we dumped back down into the PM session. We'll just be watching to see. We get this order block here in the 208 area on the 1 minute time frame. So if that can hold us, we could see us push back up. Right, again, we get that kind of buy side to sell side. So now we'll see if we get the sell side to buy side of the curve, which could take us back again towards that 215. But we know on the high time frame we got 212 to get through first, and then we have gamma levels at 210 that could offer resistance as well. So don't be looking for too much if you're taking the longs down here. Right, I'd be kind of conservative would be the play back up to 210. Right, a little less conservative would be the plays back up to 211, 212, kind of moderate. Really aggressive trade would be to try to target that 215 order block back above if we can see that full buy side to sell side to buy side. So hopefully this has been helpful for you guys. A little bit longer video, all Tesla today, but had some requests to do some videos or a video today covering Tesla. So there it is. Again, new month, so going all the way from the month down to the 1 minute, looking at all the different options and all the different support and resistance levels for areas that we could potentially drop to or rally up to. So again, thanks for the support. Hope you guys found this helpful, and I'll see you guys on the next one.